Hello, this is Mike Foreman with Game Plan Retirement with another episode of Let's Ask Mike, trying to make the world a better place by sharing the knowledge that I have developed over a long career in financial services and working with retirement plans. Today, what I thought I would talk about is Roth IRAs and Roth 401ks, actually. A question that has come up quite a bit as people head into the end of the year and start thinking about their long-term planning. I'd be happy to help you with yours if you'd like to reach out. But what I'd like to talk about today is exactly how Roth 401ks and IRAs work. So what I'd like to do here is share a graphic that I developed that just kind of graphically shows the difference. Sometimes people with all these buzzwords and hearing all these different things, they just kind of gets lost. So I created this graph that kind of shows graphically. So with a Roth contribution through a Roth 401k, the contribution is after tax. So that means you've already paid tax on that money that you put in, and therefore that tax goes to the IRS. If you play by the rules, which aren't that difficult, you'll never pay them tax again. That's the big deal. So after that initial tax is paid, the money grows, hopefully, and usually does. As long as you keep the money there at least 5 years and you're over age 59 and a half when you take it out, then that the distributions you'll take at retirement will be completely tax-free. In my opinion, the Roth 401k and IRA is really the biggest invention of my career as far as what can make a big difference in people's lives. Performance in funds and investments and stocks and bonds are always important, but the taxation is really where you win or lose this battle. So now let's compare it to a traditional plan that is pre-tax. So you earn the money, you put it into the 401k or the 403b or 457 plan, and there's no tax because it's pre-tax. The money grows, again, pre-tax, so it's not being taxed. And as long as you keep that with them, with it in either an IRA or that 401k or 403b until you're over age 59 and a half, then there wouldn't be a 10% penalty. If you take it beforehand, there'd be a 10% penalty. And regardless, when you take it out, it'll be taxable. So you get to retirement, and you have the nice nest egg and start taking money out of it for retirement. And you pay tax on each dollar that comes out if you're using the pre-tax contribution. So at the end of the day, with the traditional, you're paying tax on the large amount that you've saved up. With the Roth, you're paying tax on the small amount as you put it in initially. And so as you can see, that it can make a huge difference. Now, there are a couple other factors, things like what tax bracket you expect to be in at retirement, and what you expect tax brackets to do overall, and other personal things that you need to think about and look at, just like tax brackets and all that. But for a lot of people, it really makes a huge difference. Now, I want to share with you something else. This is from the IRS website. So there are some slight differences between Roth IRAs and Roth 401ks. So with a Roth 401k, it doesn't matter how much money you make, you can participate, provided your company has Roth as an option in their 401k. If they don't, connect them with someone like me, and they should change that. With a Roth IRA, there are actually limits on who can contribute. If, as a married couple, you have adjusted gross income of over 228,000, or as an individual, if it's over 153,000, you can't make a Roth IRA contribution. You can make a Roth 401k contribution. The limits are also different. With a Roth IRA, like any IRA, the limits are for 2022, it was $6,000. And if you're over age 50, you can contribute another 1,000. That only went up by $500 for 2023. And with a Roth 401k, you can put all of your 401k limit into Roth or just a portion of it. And that total limit went up to $22,500 for 2023, was $20,500 for 2022. And there's also a $7,500 catch up for 2023, whereas there was only it was $6,500 for 2022. So as you can see, there are just a ton of options that they're beneficial with Roth 401ks and Roth IRAs. Question comes up quite a bit. Wanted to do a better job of explaining it in detail. If you have further questions, please feel free to reach out, and thank you for tuning in to Let's Ask Mike. And I hope trying to make the world a better place by keeping more money in clients' hands so they can do what they need to do and want to do with their lives. So thank you so much and have a great day. Bye-bye.